That here out from Hiren Ved saying that global headwinds are hurting Indian markets, but the economy is stronger than it was in 2013. That's the word coming in from Alchemy Capital's Hiren Ved. He expects a decent corporate growth, even as he believes that investor confidence will take a while to strengthen.
Yeah, I think partly it was a case of valuations which were excessive in some pockets. And partly also it has got to do with the fact that we've seen a couple of headwinds in the international markets because of rising crude oil prices and the resultant pressure on the currency, right? And we've seen continuous outflows from emerging markets as a result of that. And then to top it all, we have the ILNFS situation, which has created a liquidity squeeze in the debt markets. So I think all of these have actually, it's like a perfect storm hitting you in the last 2 months, right? And markets are just trying to grapple with that and price that in. So I guess, you do sometimes see these kind of situations. The setup is very similar to what we saw in the second half of 2013. Where you had very similar elements. There was the taper tantrum, so emerging markets fell, our currency depreciated, oil prices were higher, the current account was a little bit stretched, and the small and mid caps also corrected at that time, and then elections were 6 months after that. So you have a very similar setup in the second half of 2013, and the same setup is there in 2018.
Right, but when the market started crashing before 2013, the valuations were not as high. So do you expect this time the correction could be slightly higher, or earnings will take care of that?
You're absolutely right. I think that the difference is that back then in 2013 valuations were much cheaper. Today valuations are still higher compared to where we are in 2013. But we should not forget that the economy is much more healthier. So if you take away the short-term impact of ILNFS, I think we've seen a slew of reforms that have gone through in the last couple of years, right? We've seen that the corporate sector has taken a lot of one-offs like demonetization, like GST in its stride. So I think that the industry is far more consolidated. The economy is on a stronger footing than we were, let us say, in 2013. So yes, valuations are higher, but the economy is relatively stronger, and the corporate sector is now probably sitting on an opportunity where from here on we should start to see earnings growth.
Right. What would you make of the entire NBFC and financial space? It's a big part of the market. It's the big part of any index that you would take, whether it's the mid cap, whether it's the large cap space. Do you think there needs some clarity, at least in the large ones over there, what's happening with their funding, liability, asset side?
See, I think usually what happens is that when the debt markets freeze, it's all about confidence, right? I think the government and the RBI have taken certain steps. The government in its own wisdom has replaced the board and brought somebody who's very credible to get a restructuring of ILNFS up and going. But it's going to take a while, right? I think for confidence to come back is going to take a couple of, a little while. In the meantime, liquidity has been infused into the system. The question is, when does that liquidity start to roll back again, right? My sense is that the slightly weaker players in the NBFC space or in the financial services space are likely to find it difficult to access capital. The stronger guys, I think, will have no problem. I think they are able to get money, albeit at a slightly higher cost. But I think I think my sense is that the probability that there is no systemic problem is very, very low now. There is no systemic problem. It's just about getting growth and confidence back into the system. That I think will take some more time. I think there are a couple of important CP rollovers that are going to happen in the next couple of weeks. If that goes through uneventfully, then I think confidence will slowly return back.
Right. Just a word on which sectors would you be bullish on? How would you place yourself in such an environment? Would you go with exporters because of the currency? Would you stick with the hardcore domestic manufacturing economy?
No. See, I think one should not try to change one's sector allocation based on certain short-term events like the IL&FS crisis, right? So I mean, like most people would be running away from NBFCs, but if I find a good quality NBFC cheap, the best time to buy is during a crisis, not when everything is hunky-dory. Right. Having said that, I think that overall market valuations have corrected, especially in the small and mid-cap space. So I think there's opportunity across the board. So we will have to pick and choose. It's going to be a very stock-specific market. It's not a sector-specific market.
Right. And just one last word on the mutual fund flows. In 2013, they started to become positive, but when this crash is happening, they are excessively positive. How would you await that data?
So I think there are two parts to mutual fund flows. One is the SIPs. I believe and I hear that the SIP amounts, have not dropped despite the drop in the marketplace, and that's good news. Maybe the flows that were coming over and above the SIPs, the lump sum flows, those may get impacted for a while. Do I see them going negative? I don't think so. They may slow down dramatically, but I don't think that they would become negative, because I think the good thing that the industry has done is that educated the investors that look at allocating systematically to equities, do not panic, and think of this asset class as long term. Hopefully that works. Well, unless really the markets go into a big tailspin, then we don't know. But I think these kind of corrections, I don't see it's a structural shift that we are seeing in flows into mutual funds.